Okay, good evening, everybody. Let's go ahead and get started. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or a yes there, just to let me know that it is working. Hope everybody's having a fantastic evening so far. I'm looking forward to an awesome COT report webinar. That's going to be great. Got a lot of really cool stuff to share with you guys today. I think it's going to be very insightful. So without further ado, let's go ahead and jump into this. As always, I need to remind you guys about the risks involved in the market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is, and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys. So before we get into the COT report real quick, I think this is a very appropriate time to share how we're doing with our swing trades and our overnight trades. So I want to pull up our CAD yen trade because obviously it's doing really, really well right now. Here's the trade setup. So we took a short on the CAD yen. I think it was 2 days ago. In fact, let me look up the Telegram right here. We took this trade. When did I post this? Right here. I posted this on January 9th to short the CAD yen. So that was Monday. Yeah, so Monday afternoon, I posted this short position right here on the CAD yen, and I'm still in it. Nothing's changed that way. It's just, the short position that we took. And it's doing well, right? We've got, I've had several swap fees recently because, just because this platform charges financing fees when you're holding the trade over multiple days. So I am technically up $2,300, $2,400, something like that. But when you calculate swap fees, I'm only up $1,900 right now. But hey, we've got a long ways to go on this trade. I'm actually really excited about this trade. Let me show you the technicals behind this. And this has to do with the COT report as well. I mean, the COT report helped me take this trade. But it is a swing trade. And I just want to go over this because we don't talk about these swing trades, these overnight and swing trades as much when we're in the COT report webinar or in the Bankers Close webinar. Plus, these trades are pretty awesome. The COT report in general and just these swing trades to overnight trades, they're really good for somebody who doesn't have if you don't have time to allocate an hour in the morning to trading because you've got work or something else is going on. This is kind of your golden ticket opportunity because this is the type of passive trading. You're still actively taking trades and looking for setups. Hopefully every day you're looking for setups. You can maybe set aside some time, but you don't have to set aside a specific hour like the Bankers Close, because with the Bankers Close trade, you have to be there the moment that trade setup comes. Otherwise, you're just totally going to miss that opportunity. Whereas something like this, the COT report, these swing trades, these overnight trades, these are the types of trades that you can take, set up, build a position, get the position ready, look for opportunities really at any time of the day, especially because we're usually trading on an hourly time frame, a 4-hour time frame. And so because you're on these, higher time frames, it doesn't really matter when you allocate time, as long as that you do allocate some time to look for these opportunities, right? And this is a trade that we took on Monday. I've done nothing to the trade since Monday. I absolutely nothing. I've just had the trade open and I've let the trade do whatever it's doing, right? And so far, so good. But this was the setup. So basically, and just real quickly, I want to show you guys this. So the setup looked like this. At the time, let me move these out of the, can I just grab these? Yeah, I just want to move these out of the way. At the time, this trade, in fact, I'll move this guy just down here real quick. So this has been in consolidation for basically the 2 or 3 days that we've had this trade open. We most recently got a nice move in our favor, which has been awesome. But we basically took this trade somewhere over here. What I liked about this is we just formed a lower low right down here on the hourly time frame. on January 3rd. And then we formed a lower high up here. The market came back up, and this high is lower than the previous highs. And then if you look closely, this is a head and shoulders pattern, right? And so for me, this is a signal that the market's headed to the downside, right? So I really like that. But then that's not the only thing. When you pull up Sonar Lab, you can see there's all sorts of institutional sell blocks up here. So the banks are selling the CAD yen in a big, big way right now. You've got countless, and I don't mean countless, probably like 4 or 5 or 6 different sell order blocks right through here. In addition to the fact that you're forming lower lows, lower highs, a head and shoulders pattern, you've got these institutional sell blocks that are all congregated together in one place. To me, that was enough to say, yeah, this market may try to come in and fill this gap down here and come back down to some of the demand that's down here. So I'm looking forward to this trade because it has the potential to make thousands of dollars by the time it gets down to here. So yeah, like might take profits down here, which is, let's see. Yeah, if I hit my take profit, this one trade alone will make $15,000. And so far so good, right? We're up $2,400 on the trade, which is great because it was negative for a little bit. Like I was down quite a bit earlier today, and I was down, the other day too. Tuesday I was down part of Monday. So this is the most profits we've seen with this trade so far. And I'm glad, and it's not too late. Like it's not too late to take this trade if you didn't take it on Monday. Obviously, it would have been better had you taken it earlier today, yesterday, or Monday, but it is still something that you could potentially get into if you want to know. Again, obviously, when you're newer to trading, you're probably not going to make, 2,000, you're not going to make the $15,000. I'm not asking you to risk $15,000 or make $15,000 on the trade. What I am hoping is that you practice good mechanics. Start taking the right trades, start knowing what it's like to look for good trade setups, and then learn to hold on to those good trades when they're profitable, right? I think far too often we get a good trade going. I've been there so many times. You get a good trade moving in your favor, and the inclination is, oh my gosh, I just want to close this trade because I'm profitable. I got to take that money. Not necessarily. I mean, what if you took, let's just say right now you have this trade and you're up $2,400. That's great. But what if you woke up tomorrow and you found out that you could have made the whole 15K? That's going to feel way worse than, let's say, this trade goes to its stop loss or goes back to break even or something like that. Trust me, it's going to feel way worse because my loss on this trade, if I lose, what's my loss? It's a stellar amount. Like I could lose, yeah, I stand to lose like $5,000 on this trade if I lose. Yeah, it's a gnarly amount of money, but at the same time, I'm trying to make 3 times that, right? On this, and it very well could. Like I believe it will, right? So that's my setup there. On the CAD yen. And I just wanted to share it because it is an overnight trade or overnight/swing trade. And when I say overnight, like it's just something that you're holding overnight over multiple days. It has the potential to make you money or lose you money while you're sleeping, right? Anyway, good trade and it's still going. So obviously we'll continue to update you guys as the trade progresses, but I'm still very happy with it. The other reason why I'm also pretty happy with this trade is since we took the trade, we've added more institutional sell blocks. You can actually zoom in and see that the banks have sold even more in the last 6 hours or so. There's like 3 different new sell blocks right there. So yeah, I definitely think they're trying to send this lower, and I want to be part of it. I don't want to miss this. So all right, guys, so let's talk more about COT reports. So here's let's talk about the COT report in general, what it is, for those that are new and those watching the recording of this webinar. So basically the COT report stands for Commitment of Traders. And and it is a piece of data that is released. It's a report that's released by the government every week that tells you what the big players are doing in the market and things like that. So if you go to open up a browser and go to cftc.gov, their homepage looks like this right here. It's going to pull up, and they're going to have a lot of information here. You can hover over their menu bar, and you're going to go over market data and economic analysis, and then you're going to see commitment of traders just 2 down. You're going to click on commitment of traders, okay? And they have a bazillion different COT reports out there. COT reports for agriculture, COT reports for petroleum, natural gas, electricity, metals. So the list just goes on and on. You've got the financial market with the CME, Chicago Mercantile Exchange. It's all here. So the report that I usually care about is just this one right here. It's this one that says current traders in the financial futures report. And you're going to click on long format. And then you're going to click here, and then it's going to pull up the most recent COT report. Okay. And it's a pretty boring piece of information if you don't know what you're looking at. Once you know what you're looking for, it can be very helpful, and it can give you a lot of insights as to what's going to happen in the market. Now, let me be clear with the COT report. Its best use is for directional bias and to give you a sense of where the market may be headed. Can you use it outright to take trades? Sure. But if I were you, I would create strategies. I would trade systems where the COT report tells you which direction you want to go, but then use your strategy, your entry strategy, your technical analysis to tell you when to get in. So when to get in, technical, and then use the COT report to tell you which way to go. Okay. Because there are plenty of times throughout the week, as you guys know, every week there's a winner. There's a big winner in the Forex market. Some currencies just going to go crazy, and other currencies aren't going to go that crazy. Our job is to try to find the currency pairs that are most likely to take off and just run. Okay. And then our job is to take successful trades based off of that information. Okay. And I feel like the COT report is one of the greatest pieces of information you can look at to help you determine which direction the market may or may not go. But again, can you use it to take outright trades? Yes. But if you're going to do that, be prepared to have some significant drawdowns and also significant swings in your favor. And it just depends on you how you want to manage that. Okay. So when you're looking at the COT report here, there's a couple of things you're going to want to get yourself familiar with. First of all, it's really hard to read this information just looking at it like this. You're going to want to zoom in. So I do a control plus, and I can zoom in, and I can do control minus to zoom out, so I can see the data better. I'm young and I have pretty good eyes, but I still can't see it very well. So for some of you, maybe you're older and you don't have as good of eyes as I do, maybe zoom in or zoom out, that's going to help a ton when you're trying to navigate here. The other thing you want to get familiar with is if you do a control F, you can search for anything that you want to search here, because the report is super long. And if you want to navigate to exactly what you're trading, you're going to want to do a control F, search for what you're looking for. So if I wanted to trade, say, the Australian dollar, the ticker for Australian dollar is AUD. So I just search AUD, and boom, it's going to take me straight to the Australian dollar right here. And then I can zoom in, and then you can see all of the different, all the data. This is all the data right here for the Australian dollar. Okay. Now let me show you how to read this, because there's a lot of information here for this Australian dollar, and I want to make it clear what you're looking at. Okay. So on the COT report, the government, our US government, requires that the players, the big institutions that are listed on the Chicago Mercantile Exchange, they have to, or the CME, they have to produce at the end of the week and tell us or the government and declare what their positions are. Okay, they have to say, I own this many Aussie, I have this many pounds, I have this many coffee beans or whatever it is that they're trading. Okay, they have to report that. Okay, and the government says, thank you very much. And then they put together, they take a freaking long time. I don't know why they take so long, but then the government takes all that information and they take from Tuesday, because on Tuesday, all of these players who are participants on the CME, they have to then report that information by the end of day on Tuesday. And then by Friday, the government gives themselves all the way till Friday to then release the information to the general public. So it is a little bit of a lagging indicator, a little bit. However, it has many uses, and I want to show you what those uses are, because just because it lags a little bit doesn't necessarily mean it's a bad thing. You can definitely take really amazing trades with this COT report. Okay, so that's kind of how it works. And then Friday at 4 p.m. Eastern, 2 p.m. Mountain Time, we get a new COT report, at which point you can plug in the data into your spreadsheet and use it for taking trades the following week. So that's kind of the gist of it. Now, in the COT report, there's different types of players that report their positions. You have the dealer side, you have asset manager, and then you have leveraged and other reportables. Okay. So when you're looking at this, let me actually explain each one. So dealer are market makers who, these are typically institutions that are either holding positions or creating positions to be sold to the secondary market. Okay, so a dealer could be I don't know, like an exchange that is holding positions so that they have enough stock or currency that can be sold to their clients. Okay. So dealers we don't really care about a ton because they're not the ones who are taking outright positions, which by the way, outright is a term. So we're looking for people who take outright positions in the market. Okay. Then you have asset manager and institutional. These guys are commercial, and commercial traders, they have a different use as well. So commercial traders are people who they own currencies, metals, agriculture, um, for conducting business. Okay, they're also multinational corporations that buy and sell currencies to hedge other product that they own. For example, Walmart buys and sells currencies worldwide because they own stores and all around the world. And so they have to have certain reserves in different currencies, and they often hold currencies as a hedge against the products or services that they own. Okay, so we don't really follow these guys as much either. Also, asset managers include hedge funds, pension plans that buy and sell currencies for their purposes as well. But they're not really, and they often, those guys aren't really trying to take outright positions. They're often just hedging, if they buy some bonds or they buy some stock in something to put inside your pension plan. Sometimes they throw currencies in there, not for the purpose of making money, but to hedge against the things that they purchased already. So the things they use to create dividends for you in your pension plan, they then turned around and purchased currencies to offset the risk on the other assets that they purchased. Okay. So we don't want to follow those guys either, because those guys are not taking outright positions. Okay. So anyway, I just want to make that clear, and that distinction on what an asset manager is. Then you have what's called leveraged funds. Now, this is where it gets more exciting. Leveraged funds are groups of people and banks and institutions that take outright positions. They are looking to buy and sell currencies, agriculture, metals, for the purpose of making a profit, for beating the other guy. Okay, that's what they're doing. Okay, that's what leveraged funds is. And so we want to monitor this, and I'm constantly looking at a few pieces of information here. I'm always looking at the number of long positions held by the leveraged funds and the number of short positions held by the leveraged funds. And I also like to take a look at the total change. So the change in long positions versus the change in short positions week to week. Okay. So that this piece matters as well. Other reportables, they're really small and often don't matter because they're so small. Other reportables could be like retail traders like you and me, that and their positions get reported on here. However, there's usually not enough information to really matter. And in my experience, I found it to be pretty skewed and kind of weird because you look at this other reportables, you see there's long positions here, but no short positions, and that's not true. So that's kind of weird. So really you want to just focus only on leveraged funds, okay? And what I do is I come in here every week and I plug in this information and I go to my COT report journal spreadsheet, which you can all have access to, by the way, which is free to all of you. Super awesome. And anybody in the recording, if you want access to this, either it'll be in the chat box or you'll have to email me directly to get this information. My email is steve@tradingwithsteve.com. But for those of you in the webinar, let me go ahead and throw this in the chat box so you guys can bookmark this Google Doc. Okay, so I come in here and I mark and I manually put in here the long positions and the short positions. So you can see here with the Aussie, there's 22,391 positions long and 30,858 contracts short. Okay, so with that, and that's all from this right here. So I have this piece of information and this piece of information that I'm throwing in here. But again, I also like to look at the change. Why would I want to look at the change in positions? Why would that matter? To me, it matters to see the change in positions, because if I know what the change in long versus the change in short is, then I can catch trends faster. So if I see that the banks are changing their their bias on the yen or their bias on the euro or the Aussie, and I can catch that change faster, then that might help me take a better position. Okay, so I also like to monitor how quickly these numbers are changing, because if these numbers are changing rapidly relative to the number of open interest, the outstanding contracts out there, then I might be able to catch a trade faster than other people will. Okay, so our goal is, one of the things we're trying to do is we're trying to be the most competitive we can. We're trying to be quicker at taking trades, quicker at knowing where the market's going, faster than the guy next to us, right? So we're always we're always trying to just be better at how we do it every single time that we take a trade, right? Everything in the world's pretty much competitive, and trading is no different. Trading can change your life. Like when you're talking about taking trades that can make you $15,000 on a single trade, it's going to change your life, right? And so in order to like be successful long term, we got to be better than the other people. We're here to kick other people's butts. That's what we're here to do. And so that's why I choose to have a COT report spreadsheet. That's why I monitor what's going on, try to get an edge before other people can beat me to it, right? Otherwise, I'm trying to get on the train before other people can, and trying to help you guys do the same thing, right? There's room for everybody. Like there's room for other people to be successful. I can share this with you guys and it's not going to prohibit me from being successful. That's not a problem. I love to share this information. But I am still trying to beat all the other people competing against us, right? And we're going up against some people who have been doing this longer than we have, a lot longer than I have. I mean, I've been trading over 10 years now, um, but I'm always trying to get better at what I do. All right, guys. So when we're looking at the COT report, now that we have this data, it's all put in here, okay? I am trying to figure out what is the most bullish currency and what is the most bearish currency, okay? What currency or what currencies are the banks buying the most and which ones are they selling the most, okay? So I like to use an analogy. It's a sports analogy. I've shared this with you guys before, but I'll share it again just because I think it's so perfect. When we're trading currencies, think about like a sport conference. So I like to think of football, and every single currency is its own team. So the Australian team, the Euro team, the pound team, Kiwi team, CAD team, and so on. And they're all in the same conference, and we'll just call it the majors, the major conference, right? World Major Currency Conference. And all 7 or 8 of these, I can't remember how many I've got here, but they're all competing against each other to be the best currency pair or currency out there. And they're constantly playing games against each other 24 hours a day, okay? Which is kind of weird, but if you think about it, but yes, they're all playing again. That's why the Aussie is playing against the CAD, the yen is playing against the pound, and we've got this big matchup going against everybody all the time. What I'm trying to do is, since I know there's all these different channels where I can watch all these different games, I'm trying to tune in to the one channel or the few channels where I think the greatest opportunities are gonna come from. Okay. So I'm trying to find the top currency and pin it against the worst currency, because that's where the greatest disparity is going to exist and where you're going to have the greatest moves. One move to the upside, one currency is going to go straight to the upside and the other one's going to go straight to the downside. So if I can create a currency pair where the number one currency and the worst currency are connected to each other, and and that's the trade opportunity, um you can make quite a bit of money trading that, right? So this week, and actually for the last 2 weeks in a row, the number one currency to be trading um is this pound CAD. Okay, why is that? So if you look here, the pound is very bullish right now in terms of, well, it's actually not that bullish. It's 52% of the outstanding positions are long and 47% are short, which isn't a crazy amount. However, it is a big deal because nothing else is really bullish right now. Every other currency is pretty bearish, right? So it's the most long thing I have. So it's just, pound. So the pound is extremely bullish. And then you've got other currencies that are pretty bearish. The most bearish one, I think, is the CAD. And that makes sense, right? Oil's been going down recently. CAD is tied to oil. That's definitely something that we've been noticing. So makes sense, right? So CAD is the most bearish currency and the pound is the most bullish. So if this were a team, or if this were a channel I were to tune into, this would be, and it's not always this way, but this would be the most blowout. This would be the most blowout win in the market. Okay. Pound would win, CAD would lose. It would be, tell me if you watched the TCU Georgia game on Monday. That was a bad game. I think it's terrible that we work all season long for that game. Like, here we are, everyone's expectations are high. We supposedly have the two best teams in the country, and then TCU just doesn't show up, right? What was the final score? 65-7. National championship game. If you didn't watch it, go back and watch the highlights. Absolute domination by Georgia Bulldogs. Crazy, crazy game, right? That's what we're looking for. And I'm not trying to say TCU was bad. Because they're not like they won all their games except one. They were the great team this year. Um, they beat some really great teams. Um, that's an anomaly though, because um was painful. It was painful to watch. It was hard. I watched the first half of a quarter and thought it might still be close, and then after that it was not close. Anyway, so so that would be an example of picking the best team and pitting it against the other best team. So right now, the franc and the pound are the closest things to each other. So buying or selling the pound franc wouldn't make a lot of sense because you've got the two best teams playing against each other. So the likelihood of kind of like a whipsaw type of market is more likely on something like that. Now, it doesn't have to be that way. It can definitely not be that either. So I want to make that clear. That's a possibility. Um, what we're looking for is like Georgia Bulldogs versus the very best team in the country versus like, I don't know, who's the worst team in the country? Uh, or who's a really bad football team in this country? I don't know. I'm trying to think of a really bad football team. I don't think I have any like UMass fans, but UMass is not a good football team. UConn historically has been pretty bad. Like talking about like a really bad football team that's just historically pretty bad. So it would be like saying, let's have the Georgia Bulldogs perpetually play UConn or UMass. And that's what we're trying to set up is a game between those two teams because that's the game that's most likely to have the biggest blowout. Okay. That's what we're doing with currencies. Okay. We're trying to have the biggest blowout matchup possible because that's where we're going to have a chance to create a disparity. So right now that would be supposedly the pound and the cat. Does that mean the cat is going to have some good plays during the game? Sure. Like you can have CAD can have times where it's actually, it throws a 50-yard pass down the field against Georgia and, does well. But ultimately its fate is still it's going to be a loser, right? So that can happen throughout the week, but overall, this should be the best opportunity. Does it work every single week? No, there's actually been several weeks where it's not worked either. So, um, so let's actually take a look at the pound CAD real quick this week. Let me actually pull this up. Let me show you the beginning of the week. So this vertical line here on the 8th, Sunday the 8th, is pretty much the beginning of the week. So we'll use that as a reference to see where this has been. So since the beginning of the week, this is where the market started, is basically right here. And it is now up here. So so far the pound is winning, right? It's up 86 pips. Every time it's pulled back, it has had a rally. So people, they bring it down, the CAD has some pretty good plays and the market comes down a little bit and immediately Georgia comes back and boom, market comes back up. CAD has some good plays, immediately the pound comes back up, sends it even higher, right? So this would be the number one opportunity this week. But again, is it a market that's moving straight up? Is it a market that's going complete vertical? No, no, there's definitely detours along the way. But supposedly this is the very best trade to take this week. And again, it doesn't work every week. There have been some weeks where this just doesn't work. I've seen trades where the number one currency of pair of the week actually loses. Like you have an upset, right? Upsets can happen, right? We have upsets happen all the time. Do they does but is it the most common thing? No. The most common thing is the expectation. The expectation is the pound's going to win, CAD's going to lose, Georgia's going to win, Ball State's going to lose against Georgia, or UConn's going to lose against Georgia almost every time. But there's going to be that few times every once in a while where you get a fluke and UConn does win or something like that. Or at least maybe has a good quarter or whatever, a good half, but then ultimately loses or something. Okay. So anyway, so when I'm trading, so here's how I would trade this. Now, there's a lot of different ways you can go about doing this. If I were to trade the pound CAD this week and I knew this information, okay, I knew before the week started, hey, the banks are generally buying the pound CAD. I've got this pound that's pretty bullish right now. I've got this CAD that's pretty bearish. That's a good mix up, a good, we're going to fuse those two together, right? And I know this information. There's a couple ways you can go about doing it. If you're the most passive type of trader, what you could do is you could just simply at the start of the week just take a buy. Just take a buy and hold it all week. Wait till Friday. Maybe this thing goes even higher. And on Friday, you close it for whatever it's worth. Okay. In fact, I actually had a client. Let me share a story with you. I actually have a client right now. He's not here today, but I had a client who got funded. I think FTMO or the 5%ers or something like that. Anyway, he went to a prop trading company, opened up a challenge, paid the audition fee, and basically just used the COT report to get funded. So he was just taking trades at the beginning of the week. If the COT report said, hey, buy this, sell this, he would just take the top 3 or 4 or 5, 6 trades, take a fixed position size on each one, a fixed lot size, and then just as the trade progresses throughout the week, he just monitors it. And then on Friday at the end of the week or Sunday the next week, when he resets his new trades, he'll go ahead and close out the winners and take new trades. Or if he's got losers, maybe he'll close out the losers and he'll just immediately turn into and take new trades, right? So that was kind of the system. Just basically Monday morning or Sunday night, take the trade. Friday, close everything, flatten whatever's open. If you have losers, close the losers. If you've got winners, take the winners, right? Close it on Friday. Wait the weekend, get a new COT report, find out what you're trading this next week. Boom, take those trades, hold it all week. And that was it. And the dude got funded. Just doing that. Very simple thing. I mean, I think part of it was a little bit lucky though, not to discredit it, just because it's so simple, because it's not that simple to, like, I do want to be clear, the COT report's not always that simple. I think it was probably, and not to discredit what he was doing, because it works. Like, it can work, you can do it that way. I think there's better ways, and I think he would agree too that there's better ways. But I do want to be clear that, some weeks the COT report just works insanely perfectly. It's just awesome. And if you happen to start an audition on a week where it's just great, well, yeah, you're going to make all this money and you're going to get funded, and boom, it's life's history and trading's history. It's all, everything's hunky dory. But there's other times where I've literally had weeks, and I'll show you some of my results. But if I trade the COT report that way, the thing is, most of these trades are correlated. So if everything's correlated, you're taking a basket of trades, right? And you throw this basket of trades at the market, and typically they all either win or they all pretty much lose. Okay. And so on the weeks where everything just wins, you're really, really happy and it's just awesome. And you're thinking about all the yachts you're going to buy and the trips to the Bahamas that you're going to do. Like, those are awesome, right? But then there's other weeks where things just go terrible, right? And you're like, man, I should be eating ramen noodles for the rest of my life, right? Like, it's real. Like, it is so real, both sides of that, right? So I do want to make that clear that if you're going to trade it in that simplest form, you can do that, and it has proven so far to be profitable that way over the long term. But you are going to have some terrible, terrible weeks in addition to amazing weeks. Okay, so if you're okay with both of those, then great, trade it that way. But if that's a little bit hard, let me show you an alternative. So what I would do, guys, and this is honestly, in my opinion, the best way to trade the COT report. I would come in here to the pound cat and say, okay, I know that I want to be a buyer. I want to be a buyer because the COT report is telling me to be a buyer. And then what I would do is I would come in here, look for specific supplier demand zones on an H1, 15-minute, 30-minute, that type of thing, maybe even the 4H if you want to. Come in here and say, okay, identify the different levels. So what I would do is I'd come in here to the, here's the H1 time frame, 1 hour chart. And yeah, right down here, you've got some significant demand right here. You've got a nice little support level right through here. Either have a plan to either buy or sell at support. All right, not buy or sell. You're only buying, right? Because we've already established that that's the direction of this pair this week. You could potentially buy down here. You could buy right here and just only buy when you see an opportunity. That way you can keep your stop losses tight and get away with it and have a higher take profit type of thing. So you're looking for supplier demand when you're trading something like this. Let's go back to the COT report here. Another good one would be like the pound dollar, right? That is the second best trade supposedly this week is to buy the pound dollar. So let's pull that up and let's look for zones where that would make sense to be a buyer with the pound dollar. Okay, so the beginning of this week would have been right here. Yeah, like right there. This is where the week started. Okay. And it looks like the very beginning of this week was the best part. Looks like the first day or two of this week, it went up 128 pips. And then it's pulled back a little bit since then. Today was a good day. It's up 75 pips today. Or excuse me, it's up from where it started this week. It's up 75 pips or something like that. I'm curious, was this a buy the week before that too? Was this also a buy? Yeah, in fact, the week before, it was the #1 trade to take a week ago. And now it just moved to second place this 2 weeks ago. So, and it's in second place now. So, okay. So for the last 3 weeks, this has been a buy, the pound dollar technically. So you could go back here and I think it's interesting. Like this thing was consolidating quite a bit. Oh, that's partly because of the holidays. This is all holidays right here. That's partly why it didn't move at all. But look how quickly this thing pulled back. And yeah, it pulled back into here. I would imagine that there's a bunch of supplier demand right there. Okay. Or not supply. It would have to be demand. I bet you there's a lot of demand down here. And look how quickly that thing shot up. 300 pips, right? 300 pips, almost 400 pips. And it was very quick, right? So something tells me the banks wanted to buy this in the first place and they just had a good opportunity to buy at a lower price. And so they got what they were looking for and they sent the market higher. Yeah, in fact, I'm curious, can we actually go? Yeah, sure. Oh, yeah, yep, that's supply, or excuse me, that's demand. Sure enough, this is demand. So why is this demand over here? Because this general area right here is the last known thing. Whatever happened here created a break of structure, right? So this is a structure, this is a support or resistance zone. And whatever they did right here sent the market higher. And then all of a sudden, so we know that that's a great little supply area or demand area, excuse me. And then the market comes into it, taps into it down here, and then shoots up. Now, do we want to buy every single supplier demand that we see? Not necessarily, right? If you can use the COT report to tell you what you should be buying or what you should be selling, and then the market dips into a demand or supply zone, and you know your direction, well, the chance of that supplier demand working out is much, much greater, right? Because there's endless amounts of supplier demand zones, right? And it's like, do I want to trade every single one I see? No. Let's filter it. Let's take better trades. Let's kick other people's butts. Let's take their money, right? So I think that's a great filter, guys, is, look for, trade the COT report. Get your top 6 currency pairs, top 7, top 8, whatever they are, maybe top 4 currency pairs of the week that you're watching. And then look for opportunities for when the market hits a supplier demand zone that makes sense with the trade that you're taking, and then go ahead and go with it, right? I mean, this was beautiful right here. Just imagine a buy opportunity right in here. And I'll be honest, I didn't trade that. It's my fault. But like, amazing. 370 pips. Do you know how much money you can make with 370 pips? Or even just half of that. Let's say like almost 200. Let's say you made 200 pips on that move. Oh my gosh, like so much money, right? Okay, so that's how I would trade it, is not necessarily just throwing trades out there, although that can work. You'll have weeks where you're going to be super frustrated if that's the way you do it. You can just throw the dart out there and just boom, 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 boom. If you want to do it that way, it can work. Like, you have my permission. Just make sure that you do your due diligence and you have, you know, you manage your risk and things like that, which it's harder to manage your risk that way. So let me talk about that. If you're going to just throw darts out there and just throw the trades out there, you can do that. But how do you figure out your stop loss? That's harder to do. What I've been telling people to do, if you want to trade it that way and you don't want to go through the analysis of figuring out supplier demand, you could just, pull up the Forex volatility tool from Maytaf. I don't know, pick the currency pair you're trading. We'll say just the euro dollar. Let's say we're trading the euro dollar. You have to wait for it to pull up. And then you could just pick, what I've been telling people is just pick the biggest day of the week. In terms of volatility, it looks like Friday is 114 pips, and just use an average daily range as your stop loss, a week-long stop loss. Is it going to hit? There's going to be many days where that's going to hit, right? For sure. But at the same time, it might be the best way to go. Because you do have to manage your risk with these. You can't just throw a trade out there without a stop loss. I don't think that's a smart thing to do. So you could do that, but in my opinion, the best way to go about trading something like this would be to, okay, know your direction. Okay, we know we're going to be buying. Oh, by the way, this is amazing. We'll talk about that in just a second. But know your direction, say, oh, yep, I'm a buyer on the pound dollar, right? Because that's what the banks are telling me to do. Or I'm a buyer on the pound CAD because that's what the banks have told me on the COT report. Okay, great. Once you know that, make a note of it, write it down, print it out, have it next to you when you're trading, and then look for opportunities for when the market hits supplier demand. Look, here's the pound CAD. How long has this been a buy opportunity? Let's go. How long? Let's see, it's been buy here. It was a buy. Let's see, it should have been, no, it wasn't here. It flipped the other direction. So it's only been a buy for 2 weeks in a row. The pound CAD has. So, yeah, because it flipped. Yeah, it flipped recently. So for the last 2 weeks, the pound CAD's been a buy opportunity. And it's had a few times where it's dipped pretty good, right? Like right here was the first opportunity to buy at the beginning of this week. And then the first technically was when an original signal came in. And yeah, it had a huge dip down here and it quickly came back up. What you want to bet, there's supplier demand down here. Well, let's go check it. I guarantee there's something down there that caused that thing to pull up, in addition to the fact that the banks were buying or selling. But yeah, I mean, you can already see I have Solar Lab pulled up here. You can already see there's institutional buy blocks down there. So you come over here. Yeah, there you go. So, yeah, right here, you can see there's some demand down here that ultimately again, you're looking for demand that ultimately causes a break of structure, right? I would say, in my opinion, though, how I would trade this, to me, there's a couple of different places where supplier demand was really prevalent. I would say right here was a really good one. And then I think where the market is right here is also pretty good. So I would honestly include this whole thing. This whole thing is demand right there. That whole thing is. And then you come forward, and sure enough, like this whole thing that you could have bought that whole bull right there and you would have been fine. Just this whole divot, great little buying area. Okay. And that's within the time frame that the banks have given us since the COT report has indicated that this is a good buy opportunity. So pretty exciting. Anyway, go ahead and throw your questions in the chat box if you guys have questions. If not, I'll go ahead and start wrapping up here. It looks like our CAD yen trade is doing even better now. It's super exciting. I'm now up $2,700 on this trade. Earlier when we started the class, I was only up 1,900. So we've already gone up, another $700 just while we've been talking here in the class, which is really exciting to see our swing trade do so well. It's called Sonar Lab. So when you're on TradingView, Roger, there's a lot of different indicators. The cool thing about TradingView is it's one of the greatest trading platforms on the internet, and it allows creators and open sourced freelancers to come here and create their own indicators. So when you come into, let's say you're looking at the pound CAD like you are here, you click on indicators and there's a ton of different indicators you can just pick from. These are just general indicators, but in the search bar, you can search Sonar Lab. Okay. And Sonar Lab is a creator. Okay. This is actually a dude. He has a YouTube channel. I forgot his name, but you can look him up. He's pretty smart. Another trader. He's created, not only is he a trader, but he knows how to create some of these indicators, which is really awesome. He has a lot of different indicators you can choose from, but the one that I use is Sonar Lab. And then you just search dash OB for order blocks. So this is it right here, order blocks with signals. There's 4,700 people using this indicator right now. So it's a pretty popular indicator. I'm sure many of them are my clients. But yeah, I like to use quality. Anything I can use to give me an advantage in the market, I'm going to use, right? Anything, I mean, I don't care who makes it. If it's going to help me trade better, I'll use it. If I can implement it, it's awesome. Yeah, it's free too. Yeah, I can do that, Alan, for sure. Alan says, would you be willing to post top weekly pairs in Telegram so we can easily reference it? Yeah, I think that's a great idea. I used to do that and I stopped doing it, but yeah, I'll definitely get that out to everybody in addition. But you guys can also access the COT report journal too. If for some reason I don't, or you want to get to it faster, go ahead and do that. But I'll take a screenshot in addition to that and post it, Monday morning or maybe on Saturday if I've got it all set up on Saturday. That way you have it to start the week. All right, guys, I hope this was very helpful. I hope it gives you some ideas on how you can trade. Obviously, a couple of different ways you can trade the COT report. I literally have people who have gotten funded by just taking flat out trades, throwing the darts at the market. And then I've had people do what I just do, looking for supplier demand in conjunction with the COT report. It's going to help you so much. So, all right, guys, appreciate your attendance. Thanks for coming, and we'll catch you in the next webinar.